Hello, everybody. We'll be starting the webinar at this time. As we get going, I just want to do a quick systems check. Type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, just waiting on a few more responses. I want to make sure the majority of everybody's up and running okay. All right, that's enough. I see I've got enough responses here. If there are any issues, it must be on any individual side. Feel free to type notes or requests if you start to lose any type of connection or something. All right, so there's a lot going on in the markets in terms of movement, and most of it being driven by two main things. One being U.S.-China trade negotiation updates, and another on some economic announcements that came in. So we'll take a quick look at the fundamentals and then get on the charts and see what's already happened from yesterday. We looked at some things in yesterday's session. We'll do a quick recap of some of that. Look at the opportunities that we looked at yesterday and how it came to fruition and the huge profits that I hope some of you made. And then we'll look at some opportunities moving forward as well with the current situation. So as we go forward, as always, keep in mind all investments have risk. Obviously, we have the potential for nice profits as well, which is why we're all here. But there's the risk of some losses as well as you're trading. That holds true with any investment, really, and certainly is true with trading Forex, CFDs, spread betting, and options. You can find the full risk disclosure statement on AvaTrade's main website if you're interested in reading through that. Keep in mind that what we cover is meant to be from an educational perspective. I'm not a licensed financial advisor. What we go over is not meant to be official financial advisement of any kind. But as we go over the information and the strategies, it certainly is meant to help you build upon or start building your trading strategy to improve things, to put some more tools on the tool belt, so to speak, to hopefully make you more successful in the end with your P&L. Now, as we look at fundamental news, there are two main types of fundamental news. And in general, fundamental news is information that's coming in about the economy, about breaking stories, things you read or hear, information other than the actual candlestick chart. And so this type of information certainly helps determine many times what direction the wind is blowing, so to speak, in terms of the movement of the value of assets. And so one type of fundamental news are what we call regular economic events. These are events that are scheduled. We know the name of the announcement. We know what information will be coming out. We know the exact day and time. Okay, we don't necessarily know what the result will be in terms of the numbers or the conversation that will be had, what exactly will be said if it's an announcement of some kind where they're talking rather than a % of job change coming out or something like that. But in general, we know exactly what it'll be and when it'll be. And those are referred to as regular economic events. The extraordinary economic events, that's another type of fundamental news or fundamental analysis. And that's when we're looking at, like happened yesterday, we didn't know exactly when Trump would be speaking about U.S.-China. We didn't know exactly what all he would say. Many were expecting him to talk about the exact day and time of U.S. and China signing a deal. They thought that was going to be the topic, and it turned out the topic was not that. He did not announce a date and time, and in fact, he pushed back a little, saying the U.S. doesn't really need the deal, that China needs the deal. And he said some things that made people a little bit scared again about the market. He still intends to sign a deal, he says, but he's kind of pressuring, saying he doesn't have to do everything that China's demanding. And so That wasn't what people expected. And we'll look at the charts and we'll see how the markets responded to that, which they responded in dramatic fashion, as you can imagine. So as we go and we take a look at some actual news, here's an example of some regularly scheduled economic events that already occurred today. Jonathan, you're saying that's why indices dropped and gold rose. Absolutely. It was the opposite leading up to the speech, right? Gold was dropping like crazy yesterday, and the indices had positive momentum because they thought he was going to come out and announce the day and time of signing a deal. And then when it came out that he said the opposite almost, he didn't say there's no deal, so it wasn't the opposite, but he said not quite what people expected, then boom, it turned on a dime. Gold shot back up from like 1444 to 1460, something like that. $16 climb in a very short period of time on gold. And yeah, indices went the other way. People ran to the safe havens and left the risky assets. Very predictable. And you could have gotten in as soon as you saw what he was saying, boom, you could have got in. And it wasn't too late, even if you got in a little bit late. Yeah, cryptos ran as well. Our new safe haven asset, right? Cryptos. It's amazing. Okay, so for any of you that don't know what I'm talking about with the cryptos, the crypto indices, which we do have an indice now that includes multiple cryptos piled into one indice. The crypto indice and individual cryptos have been mimicking safe havens like gold and the yen for some time now, which is interesting because cryptocurrencies were, people were afraid of them for so long that they were so erratic, and now they've become very predictable and actually are viewed by many as the new safe haven because they're not tied to any economy. There's no fundamental news typically, there are no job announcements, there are no interest rate decisions for cryptocurrencies because they don't have a home. They don't have a country to call home. They're decentralized. So people are viewing the cryptocurrencies as a nice safe haven these past months. And it's amazing in the crypto webinars, we've been comparing charts side by side, gold movement and crypto movement. And it's amazing some of the similarity. It's not exactly the same, right? Of course not, but a lot of similarity where one can give you a clue what the other might do. Okay, so back to the hand today, fundamental news. Look what came in for some regularly scheduled announcements. And you can find an economic announcement schedule like this in many locations. Investing.com has a nice one. Forex Factory has a nice one. I've been leaning towards investing.com because they list more of the announcements. I don't want to miss any. Forex Factory tends to list the major ones, but not all of them. Okay. Look what came in. What do you think this does for safe havens like gold? When you see this, what do you think gold was doing after all these? By the way, red means worse than expected, means bad news for the economy, right? What do you think happened to the strength of the pound? And what do you think happened to safe havens when all this slew of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, like 11 worse than expected announcements came in? Yeah, the currency would drop, right? That makes sense. Currency should weaken with all those bad announcements for the GBP. Okay, fundamental news. Had you been watching earlier, right? You could have had a chance to maybe react to that. We'll take a look what happened with the pound. Safe havens up, right? This is another reason for safe havens to climb, right? Why? Because bad news for the economy anywhere around the world tends to make people want to go to gold, right? Or the yen, or the Swiss franc, safe haven currencies. And silver, by the way, and platinum, some of the other precious metals you can use as safe haven movers as well, not just gold, okay? And it's nice to diversify a bit. So, yeah, that was bad news. And you combine that with what happened yesterday, right? With Trump not coming out saying, hey, yeah, we're going to sign a deal next week. That didn't happen. Gold was already going up. Then you have this bad news come in. You can already imagine if we look at the chart for gold right now, what happened today. And you could have waited till after Trump spoke, just waited for that big rise. It hit like 1460. As soon as it pulled down some, you could have got in. As soon as it got near a support level back down somewhere, you could have bought on that fundamental news knowing, hey, people are rushing to safe havens again, you'd have been back in the money. Last time I looked, it broke above 1462, headed towards 1463. We'll have to look and see where it is now. But very easy. You can see what I'm talking about with fundamental news. It isn't even about exact entry points. It's about which way is the wind blowing. And if you're only doing technical analysis, unfortunately, you might find a resistance level on gold and be trading down, and boom, it broke through. And then you lose. And you say, why didn't the resistance level hold? Well, take a look at which way the wind is blowing. Take a look at the fundamental news, and that can clue you in to which way it more than likely might go. Okay, now there's a limit to it, right? You're not right every time, but trading is never about trying to be right every time. It's about trying to be right enough to profit, right? And if looking at the fundamental news can give you that slight edge to where you're more often choosing the direction that it will go, even if it's 5% improvement or 10% improvement on choosing the correct direction, then in the end, that can make a huge difference on your P&L. Okay, moving from 45% accuracy to 55% accuracy really can make you make nice profits each month. Okay, and if you start getting even better accuracy than that, then you're doing really, really well. Okay, so the euro actually had some positive news that came in. Okay, we see this here, positive news on the euro, and that's it. The rest of the announcements haven't come in yet. There's some euro announcements coming here soon out of Italy. So some Italian numbers coming in about 3 minutes. We'll take a look and see what that is. What if these numbers come in positive for the euro? What would it be nice to pair it against? Hint, hint, look at all this red. If there's more good news for the euro, what would be nice to pair it against? If you're going to go with the euro, pair it against a weak horse, right? Which horse should be weak? Look at all these red numbers. Come on, somebody type it. Euro against what? Yeah, GBP. Fundamentally, that makes sense if you find a good entry point. So let's check back in a couple minutes, 2 minutes, see what these numbers are that come in. Sometimes they don't show them right away, especially if they don't have a predicted number. This one has a predicted number, and that's on the czar though, that's later. Let's see if they show these. Sometimes these bond numbers, these 3-year, 30-year, 7-year numbers, sometimes they don't post them right away. We'll check back in a couple minutes and see. If I forget, someone remind me to check back on the euro. Okay, so what else can we look at? Headlines. What do we see in the main headlines? Always check the main headlines before you trade. What do I see? Trump says China trade deal close, but dashes hope for signing details. That's still the driving story on front page of Reuters, front page of investing.com, etc. The major news sites you look, and that's the driving headline. That's still in people's minds then. And nothing new came out yet because it's not in the headline. It's not like he tweeted out, hey, we've got a deal now. If he had that, the headline would be there, right? And by the way, if you know some major people, and it's not just Trump, there are some others, if you know that when they send out tweets, and that seems to be the mode of communication these days, is to rapidly communicate, if you know that moves the market, which it does, join their Twitter, follow them on Twitter. Right? You can get the information before you see the headline because you'll be getting it right as it goes out. So it's a tip that could be helpful for you as well. Okay. What's this headline on the New Zealand dollar? New Zealand dollar set for biggest jump this year on central bank surprise. What happened there? What did New Zealand do yesterday? If you're following the economic schedule, you'd know already, right? Yesterday, late last night. What is this? What did they do with the interest rate? Unexpectedly. The expectation was they were going to lower it from 1% to 0.75. What actually happened? You see it's written in green, which means good for the strength of the currency. They didn't increase it, but they kept it the same. They didn't lower it. If the expectation is lowered interest rate, lowering the interest rate causes a currency to weaken. And because they expected they would lower it, the currency already weakened, right? Type okay if you're still hearing me clearly. Someone's typing no audio. You guys hearing me okay still? Okay, I've got enough responses, I would say yes. Okay, so let me tell this person it's just them. Okay, so all right, here we go. So the general effect, if interest rates are lowered, currency tends to weaken. If interest rates are raised by the government in a country, then that tends to strengthen the currency. That strengthening and weakening actually can occur before they actually do it if they already expect them to do it. So the fact that they expected a decrease in the interest rate and they didn't lower it, it means the currency already weakened. And then when they kept it the same, instead of lowering it, there was an immediate strengthening of the New Zealand dollar. Okay, so we're going to take a look at that and how you might be able to take advantage of that today. Okay, so we've got our hands full. We've got plenty to look at. By the way, this was yesterday. We looked at some charts and we were talking about what was happening with Trump and the expected announcement. And you can see I drew two lines yesterday. Okay, these are the one-day candles. This was yesterday. This wick on yesterday's candle was right up near the resistance. And we said, listen, you can do two things. You could take a market sell, right, in hopes that maybe he comes out and did what he did because he's unpredictable. And someone pointed that out because we were talking about if he comes out and says there's a deal, it'll probably break through. And we talked about having a pending order up here as a buy stop, that if it broke through, you'd be in on a buy. Well, that never happened. So the buy stops didn't lose anything. They just never got triggered. Then someone said, but what if he does the opposite? He's unpredictable. And we said, exactly. So why don't you prepare to sell as well? And we said you could put a sell stop just below, like on the 5-minute candles. If it drops down a certain distance, you could sell. Or you could just take a market sell now and put your stop loss above the resistance. And some people did that, I think. So anyways, he came out and boom, the winner would have been your sell or sell stop, and the buy stop never would have been triggered. So it was, rather than trying to guess what he was going to say, we talked about preparing in both directions. Buy stop above the resistance in case it breaks through on a trade deal positive news, or the reverse move in case he said the opposite. And it could have been a market move that you were risking just a little bit. If it went back, if it did break up, it would have hit your stop loss a little bit up. Now, those are one-day candles. Let's go to 1 hour. How much would you have made if you were trading down from yesterday's webinar? Well, that was up here. Okay, that was up here. So you could have gotten in at 109.25. And right now we're at 108.91, 92. So we're talking like 35 pips, 30 pips profit had you traded down from this location up here. Okay, just knowing that there was high potential for movement with what Trump was saying. Now, why would the yen pull the USD down with bad news about the trade deal? We already alluded to this. The yen is what? Why would the yen strengthen with bad news? Yeah, exactly. The yen is a safe haven currency, kind of like gold is a safe haven. And so if you're expecting bad news for the USD, which that's what that is specifically, it's bad news for the USD if US-China didn't get as much progress as expected. And then so you'd expect the USD to be weakening with bad news, and then you'd also expect the yen to strengthen. So again, you're pairing the weak horse against the strong horse, and you see the result. Down it went. Okay, and so what else did we talk about? Let's go to the New Zealand. That was what happened yesterday. Okay, and that would have been the end result, which would have been a pretty nice result. Now, if we take a look at the New Zealand. Let me scroll down a bit. NZD Canadian. This is interesting. Okay, so there's what happens when there's unexpected interest rate decisions. Okay, there was expected to be a decision, but the expectation was a lowering of the interest rate, and they didn't lower it. So the market reacted as if they raised it, right? Because it didn't lower it as expected. And so leading up to the decision, the New Zealand dollar was weakening, right? Weakening, dropping down. And then yesterday when the decision was made, wow, did it strengthen? Okay, we're talking, even if you got in late, you still could have rode this up even halfway. If you got in halfway, 84.28, 84.78, 50 pips. You still could have rode it up 50 pips, and it went up 100 plus. Okay, so easy profit here if you were paying attention to the timing of that announcement. Okay, and what can we do now, though? What's the question? And why am I pairing this against the Canadian? What's oil been doing today with the bad news about U.S. and China? What did oil do? What do you think oil did? If gold is strengthening because, or I'm sorry, yeah, gold is strengthening because of perceived bad news about the economy. What if people believe will happen to oil demand if U.S. and China can't get a trade deal? What do you think that does to the price of oil if there's bad economic trade deals, if there's still fighting? Yeah, it would make oil drop. People will speculate that, no deal announced for U.S.-China. Ooh, sell oil. That's bad for oil demand, bad for the two major economies in the world. So, yeah, oil started dropping as gold was going up. It makes sense, right? It doesn't always happen that way, but there's a relationship there. So, as we were starting, just before we started this webinar, I wanted to show you that this had come down to the support level and that it was a good move maybe to go with the fact that oil dropped, which, what's the Canadian have to do with oil? Why do I think the Canadian should weaken as a weak horse against New Zealand being the strong horse? Why should the Canadian weaken if oil goes down? What's the fundamental story behind that? Yeah, it's their #1 export. Okay, so, and I wish this was still sitting on the support level. I wanted to show this to you all before it bounced up. If we look here, look where I drew this red line right here. I'll draw a double line just so you can see it better. Okay, here's the support level. This was the climb because of the interest rate decision. And it climbed better against the Canadian because the oil had been dropping because of the U.S.-China news. So we found a support, right? This had come down just 5, 10, 15, 20, 25, a half hour ago. I looked and I saw this was on the support. I was hoping it would still be down there to start the webinar so you guys could look at the opportunity. If it comes back to the support, why would you trust the support level? Why do you trust the support level to hold and to trade up off of it rather than wait for the breakthrough? Two reasons, right? New Zealand dollar is bullish because of the interest rate not being lowered, and the Canadian dollar is bearish because of oil having dropped yesterday and today. Okay, so this was predictable. Had you had a buy limit pending order, buys from a lower point. So as this was dropping, you could have put a buy limit pending order right here, right on the support line. And when it hit, boom, it would have bought. And how much? 84.64. And now it peaked up to 84.80. So 16 pips profit, just like that. With a simple buy limit pending order. You don't even have to watch it. It would have already made 16 pips profit. If you throw a trailing stop on there, 3 or 4 pips, boom, you already took profit maybe of 11 pips. A one lot position, okay, you're making like $10 Canadian per pip. So you already made over $100 on an easy move. Okay, you can scalp money from the markets like this so easy. Doesn't work every time, right? What if a breaking story came out? It trips your buy limit. You're in on a buy above the support, and then breaking news comes out that's I don't know, good for the Canadian, and oil spikes up and it breaks the support. Well, you're only risking a small amount, right? You can it's 3, 4, 5 times to this resistance level up here as what you're risking. And again, if it breaks that support, you could have a pending sell stop ready to go right down here, because if it breaks that support, there must have been some kind of bad news for New Zealand or good news for Canadian. So why not take the same reason you would get out of the buy if it breaks the support, same reason you might get in on a sell. Okay? And of course, that could go wrong, could bounce back up. But again, it's limited risk. You're placing stop losses in appropriate locations. Okay? Not everyone trades with a stop loss. You don't have to, but it is one way to manage your risk, limit the risk while allowing maybe even greater potential profits, depending on how quickly you're getting in and out of trades. Okay? What's one thing you can do to preserve profit? If you get 50% of the way between this support and this resistance, which it already did, what are two ways you can protect your profit? So as this is dropping now, you're not losing all of it. There are two ways you should know. I'm quizzing you now. I already alluded to one. You could add what to the position once it's reached a profit you like? A trailing stop, right? You could add a trailing stop. And how do you do that? Let me show you real quick. Let's say I already bought on this. Okay, I'm in. Let's pretend I'm in profit. And I say, wow, I don't want to lose if it drops all the way back down, but I want to give it a chance to climb all the way back up. So what do? I right click. I go to trailing stop. And let's say, okay, I'll let it drop 5 pips. That's 50 points. Boom. Now if it goes back that distance, it closes. And if it goes up 10 more pips and then comes back 5, it'll close. Whatever the high water mark is, the trailing stop follows it. Always that number of points or pips behind. And if it ever comes back that distance, then it closes and preserves everything else, all the rest of the profit. Okay? So you can have a rule of thumb that once you get a certain percent of the distance to where you think that next major resistance level is, you can add a trailing stop. That's one way to preserve your profit. Okay, another way is to do a partial close so that you bank some of the profit and you let the rest run and see how far it goes. And if you close half of it with, I don't know, 10 pips profit, 20 pips profit, and then the other half drops all the way back down to the starting point, you're still in overall profit, even if the other half went to your stop loss that was maybe a short distance behind your start point. Okay, and in that case, you don't need the trailing stop. Okay, so those are two different ways. Here's how you do a partial close. Right click, modify or delete. Make sure you are on market execution. And then you see I can change from the whole position size, in this case 0.14, I can change to 0.9. That's the amount it will close. Whatever I put here, if I go to close, okay, I'm sorry, 0.09. That's why it wouldn't let me. It was bigger than the whole position size. So 0.09, now I can close that portion of my 0.14 trade, close. And now look how much is left open, 0.05, right? I would only have done that if it was the right situation for me. This is a demo account, so I'm just doing it to demonstrate. But if I was up in a nice profit and I wanted to preserve, I don't know, 60%, 70% of that profit, then I can close that amount of the trade and leave the rest open. And now I'm risk-free because if it drops, even to my stop loss, I'm still in overall profit. And if it keeps running up, I have unlimited profit potential if I don't put a take profit. Venkat, no, the MT4 will not tell you how much profit you make per pip. But we do have a trading calculator on our website, or I recommend even easier than the trading calculator, download AvaTrade Go onto your mobile device. And when you set up trades in AvaTrade Go, our mobile app, you'll see that whatever your trade size is, when you put your take profit mark and your stop loss mark, it tells you the exact amount of profit that you would make to those marks, or how much you're risking to your stop loss mark. So the AvaGo app will do that for you. You also can talk to your account manager. I know I've taught a large number of clients how to easily calculate the pip value manually as well. And really, you should know how to do that. If you know, let me show you, for example. We'll do a quick run through. If I have, let's do gold, because gold has been very popular of late. If I open gold, if I do one lot of gold, how many ounces do I have? It tells you right there in the trade window. one lot of gold is 100 ounces, right? So if one lot of gold is 100 ounces, then for every dollar, if I have a one lot position, for every dollar that the chart moves on, that the value moves on the chart, if I have 100 ounces, then I'm gaining or losing $100. So the number of ounces of gold determines how much the movement on the chart is worth. Same with barrels of oil. You know, if I have 1,000 barrels of oil in one lot and I trade 0.1 lots, then I have 100 barrels of oil. So if the price per barrel goes up $1, I've gained $100. Or if I have one full lot and 1,000 barrels and the price of oil goes up $1, I've gained $1,000, right? So the position size determines the pip value or point value on the chart. And your account manager can help you do the math on that, but even easier, use the AvaGo app, calculate it for you, okay? Or our calculator, which is on our website. Good question. Okay, great, Marvin. You're saying if you adjust the entry point on the platform, you can see it as well. Sure. Okay, so by the way, about the trailing stop, if you log out on the computer that you're using, when you add the trailing stop disappears. It's only client side. It's not on our side on the server. So I recommend that if you're using a trailing stop, and you can see if it's active right here, there's no trailing stop active. And if I activate a trailing stop, then I can see, it's 50 points back, 5 pips, okay? Or you can do a custom distance. You can see it's active, but if it logged out and back in, it's gone. If you lost your internet signal for a little bit and then got it back, the trailing stop's gone. I would also leave the standard stop loss here at a spot that you feel safe leaving that as well in case the trailing stop gets interrupted, okay? Just a heads up on that. You don't have to put the trailing stop or the stop loss, but you might back up the trailing stop if you have no other way of protecting because it could get interrupted. All right, good questions, good points. So let's look at gold. Well, first let's look at what's happening here with the New Zealand dollar. Let me get rid of this mock position. So if this comes back down to the support, what kind of pending order, if you think it'll bounce up again, what kind of pending order would make sense? Somewhere near entry point, somewhere near the support level just above. What kind of buy, Marvin? Yeah, buy limit. Buy limit buys from a lower point than it is now. So buy limit would tell it if it drops down here, whatever price you put in the pending buy limit order, if it reaches that price for you to buy, why would you do that? Because maybe you trust the support level. If you don't trust the support level, then don't do that, obviously. And then if it breaks through, you could have a sell stop down here as a backup just in case something changes unexpectedly, okay? So that's an option today if you like the fundamental news that backs that up. If we look at gold, here's the run up for gold. Let's go to 1 hour candles or 30-minute. Okay, here's the run up for gold from yesterday after it reached the low. Let's get rid of some of these lines so we don't get confused. We were looking at this yesterday before he spoke, and gold was dropping, and we had huge opportunity on that I'm sure many took advantage of. You see gold dipped all the way down here yesterday below 1446, hit about 1444 before it heard what Trump said, and up went the movement, okay? Just like that. That was after he spoke, this upward move. All of this going down, 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 down to this point down here was before he spoke, okay? So it turned very sharply as soon as he was done speaking, or as he was speaking. So, all right, yesterday, if you were paying attention, you could have already been in on this. Even if you got in late by an hour or two, look how much it kept climbing. That's all fundamentally driven. Huge potential for profit, even if you saw the headline late about what he said. If you knew he was going to speak and that there was a possibility for him to say something that would go and cause gold to go back up, here was the support level, support, support. Here was the breakthrough. And then he started speaking. And you could have put a buy stop right above this old support that if it broke back above the support, you then would assume, he must have said something bad for the trade deal. And if it broke back above, boom, you'd have been in on the buy stop and had all this profit up to here. Okay? So this is where you, even with news that you're not sure what's going to be said, okay, what we call the extraordinary type of fundamental news, you could have prepared for the unknown, right? You could have said, if it goes back above this support, I assume he must have said something bad for the deal, and I'll have a buy stop ready to go after you had already seen it drop below. Okay? Nice support level, broken support, buy stop above it, knowing there's a big speech about to happen, and if it breaks back above like it did, boom, you're in on the buy and look at it climb. Very simple strategy when you know there's big fundamental news about to happen. Okay? Now, question is, what's going to happen next if you didn't already profit with that? Here's the resistance, right? Look at this resistance level right here, and I can actually slide that down a little. Okay, here was the resistance before the big drop. Resistance, plummet. So it was predictable. If you were going to take profit, how would you know that it was going to reverse right from this spot? Look exactly where it reversed from. Look at that reversal. The wick hit right there, and look how that lines up perfectly with the resistance level right there. Tell me that's a coincidence. It's not. It's too exact to be a coincidence. Technical analysis paired with your fundamental analysis, that's the power of it. Okay? So when we're talking about this being a fundamental analysis webinar, you also need to do your technical analysis as well to really get to your highest achievement level with your trading. How would I know to take my profit just before 1466? Look at where the reversal mark was. Look at the resistance level. Okay, going with the fundamental news, when it approaches my major resistance level, boom, you get out maybe 1465 before it reverses off of that. Type okay if you're with me on that. Technical analysis driving entry and exit points, fundamental news driving direction. Because a lot of times people get into a position for a good reason, but then they don't know when to get out. How do you know when to get out? Technical analysis can help you. Also, following breaking news can help you. If the opposite news comes out, you better get out quick, right? But also, if barring any new breaking news, you got to find where do you think this movement will stop, or at least pause, right? And so this is a clear-cut spot where you could predict the run would either slow down and pull back. Is exactly what happened. Now, is there any reason for gold not to keep climbing? Did an article come out saying, hey, there's a deal? I didn't see any. Did you see any great economic news today? By the way, nobody reminded me to look back at the euro. But let's look. Let's look at today's announcement. And it was good news for the euro. No, flat news. So we got this good news we already looked at, and then this came in flat. Not better than expected, not worse than expected. So no big deal. Nothing that's going to move the euro much. Okay, at least we know that. Why would you expect gold maybe to push back up towards this resistance? Yeah, Jen, I agree. I haven't seen any news come out to change the momentum yet. It doesn't mean gold couldn't pull back down further. It could. But again, it's not about knowing you're 100% certain of something necessarily. It's about what do you think is more likely than not to happen, and using the fundamental news and the technical analysis to make decisions that you think are more than likely to go right. Okay, I haven't seen anything other than a slew of bad economic announcements today for the most part, and more headlines about U.S.-China trade deal not nailed down yet. Doesn't sound like something that should cause people to run out of gold right now. Okay, at least not to me. If it is to you, by all means, sell on gold. You certainly can do that. Now, so do you see a support level here? I do. What's this right here? You see that? Resistance, 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 pullback, and breakthrough candle. And then what happened as this comes back down off this resistance up here? It's acting as support again. You see that? Resistance, predictable support on the first pullback. So let's zoom in on that 15-minute candle. Here's the resistance. It tested it once, twice, 3 times, and dropped. Then it tested it again and broke through. Then it came down, acted as support once, support twice, support 3 times, and look at it climb. Okay, so if you're a scalping trader, a scalper, and by the way, we cut our spreads huge about a week ago. So AvaTrade is even better for scalping now, meaning opening and closing a lot. The spreads won't cost you as much, okay? If you're trying to take small profits out of the market in short periods of time. You see the old resistance becomes support, and it verified support right here. It held. So if you're looking to take a quick scalp, here'd be your take profit market potentially, or mark, I should say, the resistance up here. And that's not a bad entry if you trust that support level. I'm not saying you have to trust the support, but if you're a scalper, you might. Okay, that wouldn't be necessarily a bad move technical analysis wise, and also fundamentally it makes sense because it seems to be bullish environment for gold. Okay, so there's an example of an opportunity that exists right now. Where if you made this move, where would you put your stop loss? Just below what? Where would I put my stop loss potentially? And again, you don't have to put your stop loss there. You don't have to put a stop loss at all if you don't want to. Yep, several are already saying just below the support, right? So very limited risk, just below the support. If it breaks the support level, okay, it didn't bounce. Fine, I'm out with a small loss. This distance to my potential loss is 1/5 of the potential profit to my take profit somewhere just before this resistance. My take profit might be right about here. That's about 3 or 4 times the rise compared to my risk. Now it's gone up since we've been talking. So now you'd have to risk a little more to get below the support. That's timing, right? Timing is everything. If you looked at it 5 minutes ago when we first started talking, it was down here. So the risk was less to get your stop loss down here. Now it's climbed. You're already in profit, by the way, if you took that position. It already went up a 1.5 or a pip since we've been talking, okay? Even more. So if we go, let's say 1 minute candles, okay? While we've been talking, 1, 2, 3, 4. That's what happened. It went up from here to here. And it very well could break through and test this resistance level up here, okay? Again, obviously, there are no guarantees on any of these moves, but look, it's predictable what very well could happen. The potential is there, right? And if you have the fundamental news on your side, along with proper technical entry points, you should be right more than you're wrong. You really should be. Okay, any questions on this? Questions, comments? As we watch that spike up further. Okay, let's check out another asset. What do you think the indices are doing? All this news with gold rising, what do indices do? Before I put it on the chart. What do you think US indices did? European indices. There we go. Predictable, right? This drop right here. Did you have to trade immediately after Trump spoke to take advantage of this drop? Honestly, did you? These are 5 minute candles. This is only a few hours back. Trump spoke yesterday. Trump spoke yesterday. You know the huge potential profit you can make on indices. We get hundreds of points movement in short periods of time on indices. It's a great way to go after profit. And why are indices so predictable? huge potential profit and high predictability. Why are indices so predictable? Because it's not one asset. It's a group of assets that are reacting together. So if there's an outlier that moves unpredictably, it doesn't affect the greater movement so much of the whole indices. Okay, so this movement was very predictable. Even if one of the companies in the NASDAQ had some weird earnings report that made it want to try and go the opposite direction, the weight of all of the other companies in that indice can make it go the way that is expected more. Okay, so if we just go back here, which is, let's look at the time. This is today at 8:10 GMT. Okay, today, 8 in the morning. Well after Trump said, hey, no deal yet. He said that yesterday. Couldn't you have had a pending order here, right? Here, worst case scenario, you put a pending order under this support level and you say, okay, if it breaks that, I think it'll keep dropping because there's bad news for the market. Look at that. Even if you got in late with a simple sell stop, it dropped from 87.40 to, I'm sorry, 82.40 to 82.18, right? And if you got in when it was up here, knowing that, hey, it reached a resistance level over here and there's bad news for the markets, you could have gotten in on more like 100 points drop, okay? Or 50 points drop, or 40 points drop. You understand 40 points drop, 30 points drop even? How much do you make on one lot of NASDAQ if it drops 30 points? How many indices are in one lot? 100. You see that? So a 30-point drop times 100 indices, I'm sorry, $30 drop, I should say, times 100 indices. How much is that? 3,100, right? Or 3,000. $3,000 in this one move that was so predictable. That's the power of an indice. It doesn't move like 10 points. It can move 50 points, 100 points. Yeah, Marvin, don't be mad at yourself. Listen, it's a learning curve. It's a learning curve. How did we know? By the way, when this went up, let me give you an example of the power of fundamental news. Okay, there was a resistance point here, resistance. How did you know not to put a buy stop and look for a big run up? Right? It broke the resistance. How did we know not to buy and that it was probably going to reverse and drop further? What kind of news? Fundamental news, right? Why did we know that it's more likely not to sustain this breakthrough run up and more likely to crash down? We know that because of the fundamental news. That's how you prevent trading with false breakthroughs that then take a hard reversal, by understanding the fundamental news that's driving the movement, and wait for the breakthrough in the direction that you trust, which was this breakthrough after it was above this resistance. When it broke through back below, that's the signal you're probably looking for when you know there's bad news for the market. Yeah, sometimes the open price will go the opposite direction before it goes the direction that really is going to move for the day. It's a good observation. Okay, great. So, and you can look at several of the indices. The S&P 500 is also moving predictably. The NASDAQ we looked at, the Dow Jones also moving predictably. Okay. Until things change with the fundamental news. Oops, I kind of messed that line up. Let me get rid of this. Okay, until things change with the fundamental news, you can start maybe trusting resistance levels. Resistance, it dropped. Resistance, it dropped, right? You can trust resistance levels when there's bad news for the market. Resistance, right? It keeps respecting resistance, breaking the support. Resistance, support. Respected the resistance, broke the support. Broke the support. Came up, respected the resistance. Resistance, resistance, resistance. Respected the resistance and heading down. Okay, until the fundamental news changes the momentum, use your technical analysis to find the entry points that make sense. If you trust the resistance, then you trade down from the resistance. If the news changes and there's positive headlines for the market, then maybe you trust the support and not the resistance. Okay? Doesn't work every time, but if you can improve your win percentage by just a little bit by doing that, it can make all the difference in the world in the end to profit. Okay? All right, listen, if anyone has any last questions before we end today, now's a good time. We'll be back again next week, Monday evening, 6 p.m. GMT time, Tuesday, Wednesday, same as this week, earlier in the day. Please come join us next week. By the way, you can go to our YouTube channel. You'll find AvaTrade. If you keyword search on YouTube, just keyword search AvaTrade channel. You'll find we have a channel where all the webinars now are starting to be posted. There's a link on our channel that says English webinars. You'll see some of the past webinars, and now each day after the live webinar, within an hour or two or three, it's also posted to our YouTube channel. So if you missed the webinars, you're at work during a webinar, check it out later in the day or by the next morning. If it's Monday's webinar, because it's later in the evening, by the next morning it's posted. The others on Tuesday, Wednesday will be posted later that same day. Okay, so you can watch them recorded now. GBP NZD, someone wants me to check that real quick. Let's take a look. You sure you don't want GBP Canadian? Or no, you're right, NZD, never mind. GBP's the weak horse, NZD's the strong horse. GBP NZD, okay. And the pound dropped against New Zealand because the New Zealand strengthened against everything. Plus the pound has bad news today. So look at that. The pound formed a resistance level. Why might you trust this resistance level to drop back down? What kind of news came in today about the pound? Venkat, what kind of news came in for the pound? Good news or bad news today that we looked at? Bad news. Okay, so that means pound should be weakening. What kind of news came in for New Zealand that seems to make it bullish? Interest rate was good news, right? So the New Zealand quite possibly could pull the pound down, maybe a stop loss somewhere above the resistance, and you take a shot at a pullback here for the New Zealand to pull the pound back down. There's no guarantee, right? There's no guarantee. Maybe check the headlines real quick. Take a quick look at a UK-based website like there's one called Independent, independent.co.uk. See if there's any breaking Brexit news before you place the position. Make sure nothing positive came out in the latest news for the pound. And if there's nothing there, then maybe you trust this resistance level for the pound to drop against New Zealand. Okay? Obviously, no guarantee. I'm not telling you trade here is going to win, but it seems to make sense fundamentally and technically. All right, Venkat, good luck. We'll talk next week. Bye, everybody.